it's been a difficult 18 months for the fixed income market for pretty obvious macroeconomic and market reasons, and the sustainable bond market has not escaped that. So certainly issuance has been down globally and in this part of the world. Some of the things have been interesting is that there has been actually a lot of issuance from Japan and South Korea, but in local currency. So obviously when we're putting that into dollar value, then the overall value converted is lower. So some kind of pockets of interesting activity. We are starting to see a few emerging markets issuers tiptoeing back into the dollar market. And in general, in Southeast Asia, we have seen really strong investor response for ESG labeled sovereign issuances. So Indonesia did a Samurai blue bond earlier this year. It was quite an interesting structure. So we'll see if we see a little bit more of that happening going into next year. Obviously, I don't want to step on the next panel, but obviously the sort of transition financing has been a very big trend, pushed all the way from the Prime Minister of Japan with the Japanese sovereign transition bond due to be issued soon. We have seen a little bit of a drop-off in the sustainability-linked market, in bond market, and also as well in the sustainability-linked loans. We've done some research on the sustainability-linked structures that we've rated, and we found that there's a significantly higher number of sustainability-linked transactions where we find that they are not fully aligned with ICMA requirements compared to the use of proceeds format. So this has created some situations where very large sustainability-linked issuances are essentially not on track to meet their targets, which generates some potentially negative reputational risk for those issuers. And also ICMA has done a lot of work to try to improve the standards of the sustainability-linked bond because there's been a lot of concern from investors around greenwashing. We frequently speak to investors who say that they don't consider sustainability-linked bonds to be impact investments or sustainable investments at all. And there are some investment managers that wouldn't put them in a sustainable portfolio at all. So there does need to be a little bit more work to tighten up that market. And the reason for that is that structure is more suitable for the majority of issuers. Most companies do not have a dedicated pool of green or social assets that they can go to the market with a use of proceeds bond. But we need to find a way to help embed sustainability strategy into financing so that companies have their money where their mouth is as far as some of these targets. So my hope is that with some of the recent changes that have come around with the sustainability-linked bond principles, and with maybe easing of rate increases in the next year, we may see more companies be willing to take a chance on this.